Hey, Jaryd Krause from the Buying Online Businesses podcast. And this episode, I get to speak to Stephen Wible from Credit Suite. And the cool thing about this episode is Stephen and myself, we talk about how to go away and get finance to buy a website business. We also talk about the different types of loans that you can get and how you can get set up for funding and why it's really important to get pre-approval for an amount before you go away and look at websites to buy. We also talk about business credit and how to add business credit to a website business to not only grow it, but to also add value to it before you sell it. So if you're looking to buy an online business and you want to use finance or you don't have all the funds you actually need, be sure to listen to this episode because it's very, very valuable in how you can get your finance and how you can grow your online business with good business credit. Now, guys, before we start today's episode, I have an important and exciting announcement for you. I'm hosting the first ever Buying and Building Online Businesses Summit, and I'd love for you to join. We have 12 world-class speakers doing 7, 8, and 9 figures in business. We have some of the world's best website brokers, SEOs, and digital marketers. Now, guys, this summit is a free event, and we're going live on the 1st of February, 2020, and it's a 4-day event. And each day we're going to have 3 speakers. And this summit is being designed to equip you with the best principles, strategies, and tactics to buy websites whilst minimizing your risk and to also grow those businesses so you can become wildly successful with those websites you do buy. And the reason this summit's really important is because what was working in 2019 won't be working in 2020 and beyond. Because what happened in the past, and you can see in the online space, things change very quickly. So whether you're a first-time buyer wanting to buy your first ever website or you have multiple websites you want to grow, you're going to be able to get access to the best mentors in the industry who are going to be able to feed you little gold nuggets throughout this whole event. These are going to be strategies you'll be able to use in 2020 and well beyond to ensure you can achieve your lifestyle goals and your financial goals. So guys, go to the show notes right now and grab yourself a ticket to the Buying and Building Online Businesses Summit. There'll be a link there so you can get access and register for the summit. And now let's get started with today's episode. Hey everybody, and welcome back to the Buying Online Businesses podcast. Today is my guest, Steve. So Steve Wible from Credit Suite, and I got introduced to you, Steve, by a mutual friend of ours from Up My Influence, the podcast there. And he said, look, you've got to talk to Steve. Like, he helps people get credit with buying businesses and particularly online businesses. And I thought it'd be awesome to have you come on the show. So thanks so much for coming on.
Oh, Jaryd, thanks so much for having me. Yeah, Josh is a real good friend of mine as well. And he was super excited to let me know that you were somebody I needed to talk to.
Yeah.
So I'm really happy to be here. By the way, you're not the first one to make the mistake. It's Wible like Bible.
Okay, Wible. Yeah. Sorry, my apologies.
That's okay. Yeah. Listen, my whole life I'm so used to it.
Yeah. So Stephen Wible, and from like Credit Suite, right? Like, you guys have a 4. Like, I went through and checked out all your stuff before I got you on the podcast, and I want to make sure you guys are legit and real good. You have a 4.5-star rating on Trustwise, and you've got some pretty awesome reviews. You got hundreds of reviews from people you've helped that are like been struggling to get finance. And for everybody listening, before we even hit the record buttons on this podcast, we had a chat, Steve, probably about a month or 2 ago now, and just like we really hit it off in how you help people. You just shared your passion for what you guys do, and you let me know about how you started in the education space, and then this just took over because there was such a need for people to get credit, where they were just getting knocked back so much, right? So, like, I guess my first sort of question is like, how, like, when people come to you distressed, like, what's the first call of action? What's the first thing that you guys go away and do to work out to see if they can get finance?
Well, probably the first thing is we take a step back, and what we really want to know is what are their hopes and dreams. Tell us what you're trying to accomplish. Tell us why you're trying to accomplish that. And the reason is we want them to know the difference between us and, let's say, just going online and going to some lender is the human touch. we really want to get to know who we're doing business with, and we want them to know who we are. We really care about our customers, and it shows. So the first thing we're going to do is we're going to talk about their hopes and dreams, figure out the best approach to get there, because it's not always what they think it is. It's not always, and they all come with the same exact question, which is, I need to borrow X dollars to do X, right? That's what they all think it's, I need a credit line, or I need a loan, or I need, whatever it is they need. But sometimes through a deeper dive, we can figure out what they really need is, let's say they're coming for 100,000. Turns out once we dive into what they need it for, that they maybe only need 20,000, but if they're able to build up their business credit, in other words, credit that's tied to the company, not to them, they can get all the rest of that 80,000 through credit that's tied to the company. Now, what does that accomplish? One, it accomplishes what they need, which is the 100,000. But more importantly, it takes all the debt off of them personally, moves it to the business. Now, it does two things. It protects their personal credit, obviously, no utilization issues, no credit score, no inquiries. It also makes their business more valuable. Because if I was going to sell you my business and my business had $300,000 in credit that it could use that was tied to the business itself, wouldn't that be more valuable than if I didn't have anything?
Yeah.
Right. So it adds real intrinsic value to your company. And I always use this example: two barbershops doing the same volume, same neighborhood, same building, everything's the same. The only difference is one has 100,000 in credit, one doesn't. Which one would you pay more for?
Yeah, I mean, it's you've got that pool that you can dip into, right, when you need to. So
exactly.
Most of the people that are listening to this, right, their goals are to buy an online business, right, to buy a website. Now, with that, like the deeper dive would be mostly people want a better lifestyle. They want to have more time with their friends, more time with their family. They kind of want to do a bit of traveling. And that's exactly why I got into this space, is because I wanted to travel around the world and have a better lifestyle, have more time rather than working my ass off as a plumber. So that's a bit of a deeper dive into it. When people are looking to get finance for an online business they're looking at buying, can they still do the same thing where they look at a business and say it's a $100,000 or a $200,000 or $300,000 business? Can they get a loan for the whole business or a portion of the business, and then can they also have credit attached to it? How would that work?
If they're just buying a business, here's what I would suggest. If I was going to go buy, let's say you and I were working together and I said, Jaryd, I want to buy an online business, and you directed me the right way to do that, which I know you're an expert at that, so you're exactly who I would come to. What I would look at is, let's say it's a $200,000 business, or that's what they're looking for $200,000. And I didn't want to put any of my own skin in the game. Mm-hmm. I would consider doing what we have something called the Unsecured Business Financing Program, where you can get up to $150,000 at 0% interest, and it's revolving. And what I mean by revolving is you use it, pay it back, you still have it. As a matter of fact, it tends to increase over time. So I would focus on that first. Of course, the second thing I would want is this seller to maybe give me some second financing, so I don't have to put any cash into it myself. Yeah. Now, once I have the business, then I would begin working on building my business credit profile, so that if I needed more credit cards tied to the company, maybe I wanted to take my vehicle and put it in the company name and not tied to me personally. Like, there's lots of options once you own the business. But to get the unsecured business financing, all you need to do is start your LLC today and call me tomorrow.
Okay.
And it's going to be tied to you personally. You're going to personally guarantee it, but it's going to report on the business name only.
Okay, so what does that actually mean?
What that means is that you'll sign for it. You're personally guaranteeing that you're not going to go bad on that credit. However, when you pay the bill, or when you use that credit, all that utilization will report in the business name, not on your personal credit. So that protects your personal credit.
Okay, cool.
So your score, you're going to have the inquiry for it, but after that, it's gone. It's on the business only. So That's the first thing I would do if I was going to buy a business. I would look at that program first. And then once you own the business, because keep in mind, we're a business credit company.
Yep.
So you still have to have a business at some point.
Yes. Well, that's the goal. That's the goal is for people to buy a business.
And exactly. Once you have that business, then I would say to you, look, now that you have this business, let's make it more fundable. In other words, let's set you up for the future. and we build up your fundability factors. And that's a long process. When I say long, for me to explain, it would take more than one episode. But we would start right with the credibility, which is that we talk about your address and your phone number and your website and all the things that are necessary for a lender to look at you and say, yes, you're a legitimate business.
Yeah. And so say, like, because I know there's a lot of people that want to buy businesses and flip them. So say they set up an LLC, right? And in Australia, it's a PTY Ltd company. So limited liability company, and wherever you are in the world, there's different names for them. Say they set up, but you're particularly in the US, say they set up their LLC and it could be XYZ LLC or your first and last name LLC or trading as whatever. And then they buy a website business and they get, say it's a 200K, we stick to it, 200K website business. And they go, all right, cool, I'm going to buy 80% of it with finance from you guys, and then 20% of it I'm going to do seller financing. So the seller they'll pay the difference of that 20% back to the seller over maybe a 3 or 6 month period, and that could be, they'll pay that per month, and then the 80% would be financed from you, and maybe even like 70% finance from you, and they put 10% deposit down for the finance, right? So if they bought that business and they built it up over a year or 2 years and then flipped it, and you guys could see that clearly the business had grown quite well, would that company still keep its credit rating so they could use that to buy another business or a bigger business?
I understand what you're saying. So
I get quite technical, so I apologize for going real deep.
No, that's okay. I know exactly what they're trying to accomplish. What I would do in that case is I would start, like in America, I would set up as an S corporation, my main corporation, and then I would buy this other business and set it up as a separate LLC underneath this S corporation.
Okay.
I would build up credit for both companies, both the S corporation and the LLC, and then I would sell that LLC to somebody else
and keep the S corp.
You got it exactly right. That way you're accomplishing two things. One, hopefully now that business is more valuable, but two, you're keeping your time in business, which is very important when it comes to financing.
Yes.
So the longer you have that S corp open, the more apt you're going to be to get better financing, because obviously once a business makes it past 5 years, banks all take a sigh of relief. Yes, they're going to make it. They're over 5 years in business, right?
Yeah.
I believe 50% of businesses go out of business in the first 5 years here in America.
90% go out of business. The 90% of startups fail.
Yeah.
And that's exactly why I've resorted to stopping my startups, which I failed at as well. And so many other people do. They come to me like, Jaryd, I've just had somebody come on board into our community last week or the week before? They're like, hey, I've set up 2 Shopify stores, tried all these different types of online businesses and hadn't really pulled any money from them because it's hard work and it's the first time they've done it. They don't know what they're doing. And it's much easier to buy something that's already established and it's past that 90% failure rate, which is why we're actually here.
Right. All your systems are in place. And ironically, do you know what percentage of business owners are unaware of business credit?
Probably like more than 50, I would suggest.
Not the exact same number, 90%.
Wow.
90% of business owners have no idea that business credit exists. So what they do is they finance their business through their own personal credit. So now when those businesses fail, like you just said, guess who else gets wrecked?
Yeah, so their credit rating gets really bad, and then it's going to be a flow-on effect to buying a house or a car, right?
Or another business, maybe.
Yeah.
Right. So in reality, this is one of the most important things a business owner can do. Yet 90% don't even know it exists.
Yeah. So say somebody that say I come to you, I'm like, all right, I want to buy something for $300,000, a business. Like you said before, I would have to personally guarantee it at first, unless I set up an S corp first. Would that be correct?
No, you're always look. And this is something where people get confused, because when you talk credit, people always think credit lines, because that's what we're used to as consumers, right? We're used to credit lines, taking a loan on our house. When talking about cash credit, and cash credit is credit that you can use to buy something anywhere,
Mm-hmm.
right? They're almost always, not almost, 99.999% of the time, they're going to have you sign personally because it's cash. You can
Yeah.
run with it, right?
Yeah.
When we're talking about business credit, and there is a difference, we're talking about credit for your day-to-day operational things. I'll give you an example. So I'll use the online business. So if you have an online business, you have to buy products from company A and sell it through Shopify or whatever. And let's say you have to front the money, the inventory,
Yeah.
you can get credit to do that through the company. Let's say you have a trucking company. You're going to need fuel. You can get gas cards. I was a real estate investor. Home Depot credit would be great. Vehicle credit to drive my vehicle.
Yeah.
So that's what business credit is. It's really credit with vendors to grow your business. You're in a t-shirt business, you can get credit to buy the 500,000 t-shirts if you have a big order.
Yeah. Yeah. So basically that's people that are already listening that may have an FBA business, and what we call that, Steve, is a fulfillment by Amazon business. So they'll buy a bunch of inventory from somewhere in the world, maybe China, and they'll send it to Amazon's warehouse. And then when they list it on Amazon, then what happens is the Amazon warehouse will distribute those products for them. So they could get a line of credit, obviously, for buying that inventory and sending it to Amazon, right?
Exactly, like my book.
Yeah. So you got a book.
Exactly
awesome, congrats.
Right.
Yeah.
Right. So that's exactly right. What you're talking about is exactly what I'm talking about. So again, we have funding, right? And then we have business credit.
Mm-hmm.
The two are meshed and inextricably tied together, but most people just look at funding because they want instant gratification, right? They want the money to buy that business. They want the money to buy that product. They don't even think about all these other options over here. And that's our job. Our job is to share that information with business owners.
Yeah. And it's really good. It's really good and valuable information, because most people are thinking, and this is what I come to, is like, I just want to get money so I can buy this business. But attached to it would be, you could use the business as collateral to get more credit as the business grows, and that business funding will grow as well. So,
want me to give you an example? I'll give you one example. It's really simple. It has nothing to do with what I taught the UBF program. So if I was going to buy your business, and let's say you wanted $500,000, and I know the UBF program only goes up to 150, I would say, okay, great. Tell me about your revenue. And let's say your revenue justified that number. I would find multiple ways to buy that. I would buy the business with a down payment of, let's say, $100,000. I'd have you hold the note for, let's say, 6 months, which is not extremely long in buying a business, actually. I would immediately take over the business, take the revenue, and go get revenue financing to pay off the loan.
Okay, great.
So there's a million ways that you can make this happen. You just have to be creative, which is your job. You teach them how to do that, right?
Exactly. And we've got so many different structures on how we can use seller financing, down payments, like hold the note. So many different ways that we can use finance, or use seller finance, or use our personal finances. But then when it comes to using finance from a finance firm, or a broker such as you guys, then there's also an awesomely, so many creative options that you can go down. And that's what I wanted to ask. That was my next question, is like, say somebody wants to buy a business where they've only got, like you said, 25% or 20%, of the money to buy it. What are the options? Like, is it that hold a note for 6 months until we can prove revenue? Is there many others as well?
There's so many. I mean, I'm looking to my left. I have two screens, right? I apologize, audience. I'm not looking directly at the camera, but I want to make sure I don't miss anything. We have everything from revenue lending, merchant cash advances. So if you're taking credit cards, you take over the business, you can get advances on your credit card, obviously. PayPal obviously will give you a loan.
Yeah.
The unsecured business financing we talked about. I have 401k financing, securities financing, peer-to-peer lending, angel investing, venture capital, private investment, equity investment, inventory financing for those that have to buy the inventory, right? We have certainly SBA loans and term loans, lines of credit. But so my point is, this is just a small list that I'm reading from. There are just as many opportunities or options as there are ways to buy a business. If I asked you how many ways there were to buy a business, Jaryd, we could be here for what, 2.5 hours, 3 hours talking about it?
We could be here for pretty much most of the day.
Right. So and to me, my favorite is when you combine all of that. Like you take couple different options. We do some seller held financing. We do some down payment. We do maybe a line of credit or revenue. There's a million ways to do it. Look, I bought an apartment building, 187 unit apartment building with $1,000.
Wow.
I found a way to get that $4.5 million through tax credits, investors. I would have gone to my family and said, "Hey, who wants to buy in? I'm flipping this for $5.5 million." Right? So who wants to? There's a million ways to buy a business. We're just a very small piece of the puzzle.
Yeah.
But if you're flipping the business, which is what we started off talking about, then there's two ways to make a business valuable. Obviously, sales is one, right? Increase the sales or cut the overhead, depending on where you're at. And the second, the one nobody ever talks about or thinks about, is what I was talking about, which is adding that business credit to the business. Adding this available credit, and it's a process. It takes time. It takes a little, not a lot of work, but a little bit of work. Now, if your business has that 50, 100, 200, 500, it's the sky's the limit. That has intrinsic value.
Yeah, and you could do a combination of all three, right? Cut the expenses, increase growth of traffic and rev, and then also bolt on this other piece. And it doesn't have to be done straight away or overnight. It can take a 6 month to 12 month period. But when you sell a business, and so like, for example, you want to sell a business which is $500,000, right? And that's from you decreasing the expenses and increasing its revenue. And then you go away and get some business financing, which is a pool of 100K. If I come along and I go, all right, I really want to buy this business, but all I've got, and I don't even use finance, but I've only got $500,000, I'd be like, well, I don't want to spend all my money, my $500,000 on this business, because how am I going to dip into, like, how am I going to get like money to grow it? Right.
How am I going to get capital?
So then I've got no surplus or funds there. I could dip into that pool that you have of that 100K credit to buy more inventory or put it into marketing or whatnot. So it's a really, it's a great, even if people that are listening to this and they want to sell a business, not just buy it, like speak to you guys first, obviously, and bolt that on and sell it with that option.
Absolutely. And look, business credit can be used to create your own line of credit. This is one of my favorite stories. I've had truckers go through our program, and I'm picking on them because it's easy for people to understand. Truck drivers buy a lot of gas, right? Mm-hmm. I've had truck drivers get $50,000 lines of credit with fuel companies, and now instead of paying out of their pocket for that fuel, they leave it on the big company, right? Let's call it Shell or BP or whoever.
Yeah.
And then that cash they normally would have been spending, they keep in the bank, and then they go buy a second truck, cash. So they've created their own line of credit, cash credit, right? Mm-hmm. To buy that second truck, which they could not buy in the company name because they just didn't have any business credit set up yet.
Yeah.
So they've effectively leveraged that. And I've seen this happen time and time again. We had somebody that built up 14 trucks at a distribution center, all because she got her first line of credit with a fuel company. Awesome. So even you current business owners out there, look at your day-to-day expenses. And I'm not talking payroll. I'm talking about operational stuff, right? What do you spend the most money on? Is that coming out of your bank account? Is that going against your personal credit card, your personal credit line? If you can find a way to shift that somewhere else onto a much larger company than yours and keep the cash in your pocket, what could you do with that extra $50, $80, $100, $300,000 a year in cash that you have on hand to maybe buy another business, maybe buy your competitor?
Yeah. It's some people say, it depends on who you talk to. Some people say to have 3, 6, or even 12 months worth of expenses in cash, liquid, in case something happens with your business. To be able to have that surplus there is very valuable. Especially as we have businesses, we have those peaks and troughs, right? And it doesn't matter whether you're going on the trend up, it's still you got those peaks and troughs. So,
hey, I'll tell you this: I sold a company. I sold a big printing company. And I will tell you right now, this guy who bought it was genius. He made us an offer. It was fantastic. But he looked at our reserves. In our reserves was enough cash to buy us.
Wow.
So he came up with enough to put down. We gave him seller financing for 6 months, and he basically paid us off in 90 days using our own money. Right? So even think in terms of that. If you keep cash reserves, that actually makes you more valuable.
Yeah, certainly. So that's for people that own existing businesses, which is important. I want to really focus on people that are coming to buy businesses, because that's what most of the people are coming to. I mean, this is great for growing them. which is what I help people with, is like we teach people to buy and build them. But when they come to you and they're like, hey, I really want to buy a business, what do? They sit down with you and you work out, all right, you've got X amount of money, you want to buy a business that's X or this size. These are the different strategies you would go. Like, what are some of those strategies that you would use or suggest with them? Like, say they don't have a whole lot of money. Most of the people, they've heard somewhere that it's super easy to go away and buy a business or a house with zero money down, and it's not a reality, right? It's just ridiculous. No. So yes. I really want to stress that on the podcast is that, guys, don't be thinking you're going to go away and buy something with no money down. You have to have some money there to back it, and maybe even something else for collateral as well. But say I want to buy a $500,000 business, and I do have only like 30 or 50 or under 100K. What would be like maybe 2 to 3 different strategies that you would say to me that I could go away and that would help me to buy a business like that?
It's going to depend on your situation. I wish it was as simple as that, Jaryd. But one, I would say, what kind of advice? Because I'm not a lawyer. I'm not going to tell them how to structure their deal.
Yep.
But when we're talking about getting as much money as they can, so they come with a stronger offer, which is really what we're talking about, right?
Mm-hmm.
Then I would immediately go for the UBF, the unsecured business financing. And for that, they're going to look at a 680 credit score or higher. But it's 0% interest. And anytime I can get 0% interest, I'm in. Right? I mean, you can take 0% interest, put it in the bank and make money at it.
Yeah.
Right. So I would look at that, and that's typically for about 18 months, which is more than enough time to structure a deal for a business. In other words, you can get seller held financing for up to 18 months before anything really kicks in.
Yep.
Right.
Awesome.
So that's the first thing I would look at. Then I would suggest that once they have the business, and I would want to talk to them about the cash flow of the company. Are they buying a name and an asset but no real cash flow? What are they really buying? If it's operational, it's got cash coming in. What's the profit on it? What can the business afford? Because then we talk about how do you back that up? Do you back it up with an SBA loan? Do you back it up with a term loan? Do you just take revenue financing, pay the owner off, and restructure it? I mean, there's so many ways. And the key is knowing what products to get, and more importantly, knowing where to go to get those products.
Yeah. Then this is really, you go.
I'm sorry. What I was going to say is most banks or lenders have one or maybe two products. So what happens is they're in this box. You come to them and they say, well, we can get you an SBA loan and a term loan. And you don't qualify for either. Oh, I'm sorry, you're turned down, and that's the end of that story. That's not what we do.
Yeah.
We look at the whole picture and go, hey, you know what? We got somebody who has who's into inventory financing, and that this business you're buying has inventory. So let's see if we can finance that for you. There's a million ways to do this. Because
this was going to be my next question as well, is like last time we spoke, you told me how many different types of loans you guys can go for, because people come to me and say, Jaryd, I'm going to do an SBA loan. But that may not be the best loan for them in their particular, position where they're in their life and what they have around them, like assets or income, and the business they want to buy as well. Like you have a plethora of different types, and you as a broker, what you guys do obviously is you work out where their situation is and then identify which would be the most likely loans for them to be able to get approved for, right?
That's exactly right. What we like to say is we're the smartest way to get funding, right? Like a smartphone. We're a smart lender. Yep. And the reasoning is like the SBA loan you talked about. I've had people come to us, and I'll just use a t-shirt company as an example. Hey, I have this big t-shirt order. I need to get an SBA loan. Whoa, wait a minute. You're going to go through the whole SBA thing to take an order that you're going to make 100% profit on? No. Let's get you purchase order financing, right? Mm-hmm. So let's say you buy an online business, but it sells to large companies, and somebody wants to buy $100,000 a year product. Get me the purchase order. We'll fund 80, 95% of that. Awesome. So we have so many products that the big issue is, look, Google's great, but I wouldn't use Google to get funding, right? Just because they have great SEO doesn't mean they have great lending products.
Yeah.
We teach people how to get business credit. So the natural fit was lenders started coming to us. Hey, you're doing a great job, and your people always get approved. We'd like to come on board. That's how we ended up being in the actual lending business. It was demanded of us, as opposed to us going into the business. it came to us and said, let's help as many people as we can, and it just grows and grows. We have over 300 lenders at this point.
Yeah. So initially, for everybody listening, you guys started out with educating people, and then they needed money, right? And you guys reached out, and I forget a name, reached out and started helping people get, and you got really good at it. And then it's that demand, and that's what anything is built on, is the demand for it.
And the great part is, we don't charge our customers a penny. What happened is the demand was so high, and we treat our customers so well that lenders were coming to us and then discounting their rates to our customers. So awesome. What's really great about this is, like the one program, the UBF, those vendors, we have lots of them, typically charge 12.5% to 15%.
Wow.
Right? They came to us and said, well, not interest, but just a fee, a funding fee.
Oh, okay.
All right. That you can use that line to pay. So it's not coming out of your pocket.
Yep.
They came to us and said, we'll do it for your people for 9.9. So even if you went directly to our vendor, you're going to pay 3 to 5% more.
Yep.
And then the difference is we're involved. So we talked about people, right?
Yes.
That's why we're the smartest lender out there, I'll call it. We're the smartest way to manage your money, to manage loans, is come to us, because we're going to manage it, and we have no skin in the game. And what I mean by that is, I don't care if I have 5 companies and 4 of them approve you, I'm going to give you all 4 and say, which one do you want?
Yeah.
Because we don't care. We're not charging a penny, and we basically get paid the same from all of them. So
yeah,
may the best lender win.
Yeah. Yeah, that's great. It's and you give choice to, this is a huge thing, is with financial planners and advisors and all that sort of stuff, is giving people the packages that are going to suit them the best to get the pay down the line. And I love that you guys are just open about that. So we've covered so much already. I particularly want to know, like, say somebody just has no idea about funding, but they know they want to buy a business and they don't have a whole lot of money. What's the best steps for them to take to contact you guys? Is, like, somebody's got like 10 or 20 grand and they want to buy something. Should they go away and speak to you to find out, how much they could get approved for, depending on their position, or is there a form that they would need to fill out? Like, what would be the process? Actually,
I'll tell you what I'll do for you if you're okay with it. I would like to send you a link to a website, and or I can give it now verbally. That's up to you.
I can just put it in the show notes. It's totally fine.
Okay. So they could go to creditsuite.com/. You caught me unawares here, buddy. I believe it's funding, but let me make sure.
That's cool. Well, anyway, guys, what we'll do is we'll put that. It'll be creditsuite.com/something. And I'll put it in the show notes for you guys. So
pretty easy. /business-loans.
Okay, awesome. Cool.
Business-loans. Creditsuite.com. That's suite, SUITE.com /business-loans.
Awesome. So that I'll put that in the show notes for everyone. And yeah, so is that something that can help them work out what they could get funded for, or the amount of funding they could get?
Well, what'll happen is, that'll go to a funding officer, and they'll look at the big picture and then come back to them and say, this is the options that you have.
Yeah. Yeah.
And that's really what it boils down to.
Yeah. And so that's a really important step. Like, people that come into my community, right, they want to buy a business, and most of them are coming in with cash. And then the option of financing is just an option to them. Most of them were just going to come in and buy them cash, which is where I started as well. But for somebody that wants to use finance, what I suggest people do is go away and find out what they can actually get approved for, so they know what type of business or the amount of business they could buy. And then it will change dependent on the business as well, because you guys will look at the type of the business that you could lend for as well, right? So,
well, when they're buying the business, we're really not looking at that, because they don't own the asset yet. Once they own the asset, then we can look at multitude of items. But when they're buying the business, and I just want to warn your listeners right now, the only thing we have to look at is them personally.
Yes.
So we can make suggestions, and actually you'll make the suggestion on how they should structure the best deal, right? Because that's what you do.
Certainly. That's exactly what we do. So, and this is what I've done with other clients that have used finance, is they've gone to buy a business and they had the assumption of, okay, I'm going to be able to get approved for X amount. They went to buy the business and they didn't get approved for that amount, right? They had the assumption. So assumptions aren't good enough, guys. Like what I'm saying is make sure you go away and work out what you are pretty certain that you can get approved for, right? From a lender like you or a broker like you, and then go away and look at those businesses according to you having confidence of what you can get lending for. Otherwise, you're wasting your time. I mean, you're sending yourself in circles and you're causing not just pain to yourself and trying to look at those types of business, but all the people that are trying to sell them as well. So it's better to just work out, hey, what can I get approved for? And then go away and look at the businesses. Would you suggest the same, Steve?
Absolutely, 100%. That would frustrate me to no end if somebody came to me and said, I want to buy your business, and we came to an agreement and they couldn't even come up with a small percentage because they weren't approved and they didn't know going in. That's no worse than somebody going out to look at houses and they haven't been pre-approved for a mortgage yet.
Yeah.
Right? How frustrating is that?
Yeah, exactly. Awesome. Well, thanks so much. Where can people go and find out more about you? So that I'll put that link in, and then I'll also put a link into Credit Suite as well.
Just cool. creditsuite.com. If they want to talk to me personally, they can always reach out to me directly at Stephen, STEPHEN, at creditsuite.com. I will warn you, I'm on the road a lot. I'm in a lot of podcasts. I'm out spreading the word to the good people, but I'm happy to answer any questions.
Yeah. And thank you so much for your time, because everybody listening, Stephen has been like 5 podcasts in the last week and just got back from another trip. So really do appreciate your time, Steve. And
Jaryd, for you anytime. One of my favorite people.
Thanks so much. Really appreciate it.
All right, buddy.
Thanks. Bye.